after the FDI vote win, the government now hoping it can push forward its reform agenda. But fresh challenges seem to be emerging. Hello and welcome. You're watching We Mean Business. I'm Shweta Rajpalkoli. On the show today, we're asking if the winter session will see any work getting done. And also a more long-term question, is India moving towards realizing its full economic potential or not? Let me introduce our guests on the show today. Dr. Arvind Virmani, non-resident senior fellow at the Brookings and former ED of IMF, as well as former chief economic advisor of the IMF, with us here in the Delhi studio. Sumant Sinha, chairman and CEO of Renew Power, joins us also on a link. Dr. Pronab Sen, former principal advisor to the Planning Commission, with us here in the studio. Mr. Ashok Kumar Jha, former finance secretary, also with us in Delhi. Vivek Dehejia, contributing writer to the New York Times and author of Indianomix, Making Sense of India, a book that has just been released, is also joining us on the show. Many thanks all of you for being with us. It's a fantastic power-packed panel that we have today, and we're hoping we can get some sort of policy prescriptions, some ideas on how policymakers can revive the economy and bring growth back on track. Let me start this discussion by actually going to Dr. Arvind Virmani, who had a very interesting talk yesterday on a subject that Indian economy, is it a shooting star or a sprinter? And who better than Dr. Virmani to tell us his analysis? Shooting star or sprinter, sir?
It's already reached the category of what I define as sprinters, and that is because for the last 10 or 11 years, it's grown at an average per capita growth rate of 6%. There are actually only about a dozen or so countries which have done that in history. There are another dozen which have grown at more than 7% per capita. But the interesting thing about India is that at least till last year, it was only one of 6 countries which was still growing at 6% on this long-term basis.
Okay.
That is the average over 10 years.
And is this positive data something that we tend to ignore when we constantly keep saying, you know what, we've come down from 9% to maybe 5.5%. Yeah. Do you think the fact that at least we've consistently been able to grow at a certain level is something that policymakers are clearly not highlighting?
Well, the important thing is what the study shows is that many countries grow fast for a while and then slow down sharply because they don't respond to challenges. So to the extent that all of us are bringing to the attention of the government and the political system that there are problems which need to be addressed, that is certainly true. We have to address those problems.
Sure. Otherwise
we will slow down. There is no escape from it. So you have to do the things which need to be done.
Clearly, we need to do the things that need to be done, but in terms of the reform process, a term which many say is used very, very loosely, you've actually tried to address whether we need more big bang reforms or incremental reforms. Which one of the two is something that works in the current scenario?
Well, what my study of fast-growing economies showed is that when you have a crisis, for example, we've been in a global crisis. When you have a crisis, you have to address the immediate problems first. You know, some people keep talking about labor reforms. That's not relevant right now. The important thing is, for example, the fiscal deficit, which is also connected to the current account deficit, which is too large. So you have to solve the immediate problems. Otherwise, they can throw you off and you won't have time to do the big stuff. But having said that, given that our investment growth rate has fallen so dramatically, really we clearly need to do something about the investment environment where the FDI and other issues fit in.
All right, let's try and address each of those issues. And Sumant, I'd like to bring you in here because we've in the past had several discussions on the nature of reforms that the government needs to focus on. I remember your view really was that instead of focusing on reforms that are clearly big bang and sound big, maybe like FDI and multi-brand retail, even though it now seems to have worked in the government's favor, it needs to focus on more structural issues and investments like Dr. Virmani was mentioning. Do you think the government is again losing track of that focus, which is the most immediate pressing need?
Yeah, I think, Shweta, you know, there are two fundamental issues that the government needs to focus on. They're both large issues, but if both of those don't come into play, then the future growth of the economy will continue to stall at around 5 to 6%. And the first issue is the one that Dr. Virmani mentioned, which is the issue of the macroeconomics of India. Right now, the entire macroeconomic story is looking really very poor. You know, whether it's inflation, whether it's high interest rates, whether it is the current account deficit, whether it is the fiscal deficit, you know, across each and every of the macro numbers, the story looks poor, whether it's savings rate, investment numbers, and so on. And so therefore, we need to somehow begin to correct this, because if we don't start correcting this, fundamentally interest rates won't start to go down, and if that doesn't happen, then your investment cycle will not kick in. Now the question is, which handle do you catch hold of to try to break us out of the current sort of cycle that we've got into? There are 2 or 3 real areas from which you can try to crack out of the cycle. Now the first is, of course, if the global economy suddenly picks up and our exports start doing much better, more foreign capital begins to start coming in looking for lower returns than than Indian investors are looking for, and so suddenly you have a glut of capital and sort of a market overseas. So that could be one possible way in which we could break out of this the logjam that we've got ourselves into. But that doesn't look very possible, unless and until there's a concerted global pickup across China, Europe, and the US. And even though China is showing signs of revival and the US is sort of trundling along at 2%, Europe is going to take some time to fire. So it's going to take us 2-3 years to get the global economic sort of situation right. So it doesn't look to me that in the short term that's going to provide the stimulus. So the question is, the only other point that the government can really use to provide that stimulus is really from creating a much better environment for domestic investments. And of course we need to encourage international investments, FDI, FII, etc. in India. But at the same time, unless you crack the issue of how to get domestic investments into the economy, we're going to continue to stay in this current morass. Now, how you do that really, Shweta, is by addressing all the micro issues in various sectors. So you really have to just pick up each sector, do a morning to evening brainstorm, figure out what are the key issues in that sector, and then find solutions. A lot of the solutions are interministerial in nature. They require decision making, they require faster coordination, but really that's all that it is. We don't really require anything more complicated than that. Indian investors and entrepreneurs right now are waiting for a change to happen so that they can again start investing. And I think if the government can just demonstrate some willingness from a sectoral standpoint to redress some of these issues, I think we'll start looking at a much better pickup in the domestic investment environment.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.